All right, what's going on, guys? This is Luke here. We're back with another video. Today, I want to go over how I approach the market every single day and my thought process going into market open and how I prepare, how I mark my charts out, what exactly I do. I'm going to show you guys this checklist. I might have to make the text a bit bigger, but after that, we're going to go into FX replay and I'm going to show you kind of like a live example because it's hard to do on TradingView, but I'll start on TradingView and then we'll go there. So, yeah, basically, if you guys want to screenshot this checklist, I would. Very important. There's a lot of good things in this checklist that I follow every single day. I follow all of this every single day, and I think this is something that a lot of you guys need because a lot of you guys aren't coming in with a specific plan. You're kind of just coming in and winging the session. So the first thing you're gonna do is check Forex Factory. Now, I know probably a lot of you already fucking use Forex Factory, but there's probably some people that don't even know. There's some beginners. So what do is you go onto forexfactory.com and you're going to go to the day. So for example, this Monday coming up, what I like to do is filter the events. So you can go to this green button right here and you can filter, take everything off but USD if you're trading, futures, NASDAQ, ES, whatever. And you can leave yellow folder, orange folder, and red folder, but the main thing is knowing if there's red folder events and orange folder events. The yellow aren't really going to have a high impact. Those are low impact, this is medium impact, and this is high impact. So you want to be aware if there's news. So for example, we have 8:30 orange folder news on Monday. So we're pretty much good to trade on Monday because we don't have anything, at market open or really affecting market open that much. But let's skip through the week. On Wednesday, we have FOMC at 2. This is just something you need to be aware of, okay? So you always need to check Forex Factory first. That is the biggest thing. A lot of people skip that and then they realize what the fuck happened, why did it get stopped out, and they didn't realize that there was news. The next thing you're going to want to do is start on the daily time frame. You're going to want to see if we swept out the previous day high, the previous day low. What way is the daily trending? Are we approaching higher time frame draw on liquidity? So this would be like, weekly highs, monthly highs, whatever, just stuff like that, or other daily highs. Next, you're going to go down to the 4 hour and the 1 hour, and you're going to look at the structure. I don't know if I spelled that wrong, whatever. And you're going to see, what are we respecting? Are we respecting 4 hour bullish gaps? Are we respecting 1 hour bearish gaps? What way are we trending on the 4 hour? What way are we trending on the 1 hour? And just kind of like an overall kind of view on the 4 and the 1 hour. That's like your higher time frame. Then you're going to mark out all the important draws and liquidity. You're going to mark out the higher time frame for value gaps, whether that be 4 hour, 1 hour, 15 minute. You're going to mark out your session highs, your session lows, previous day high, previous day low. And what I use for that is going to be this ICT kill zones and pivots indicator. You can find this under indicators. I'll show you guys right here. It's this one right here by Trade for Op. So you can add it. It's free. And I have a whole video on it. I'll link it in like the comments or something like that where I talk about my settings and stuff like that. So basically, you're going to mark out all your important draws and liquidity, your higher time frame for value gaps, your session highs, your session lows, all that stuff like that. Then you're going to go down to the 15 minute, the 5 minute, and you're going to see which way order flow is being respected. So are we respecting, are we trending bullish? Are we respecting bullish gaps? Or are we respecting bearish? Are we respecting bearish gaps in the 15 and the 5? Then you're just literally going to wait. You're going to wait for market open. You're going to see which way market starts to manipulate or displace towards, and you're going to just look for an entry, whatever your entry model be, whether that be just the displacement candle, whether that be like an inverse for value gap, whatever it is. So what I'm going to do, I'm going to pause the video really quick, and then we're going to come back, and I'm going to show you guys kind of a live example, not like a live example, but just how I would go about this exactly. So be right back. All right, so let's look at an example from yesterday. So it'll be Friday the 23rd. So basically, it's hard to kind of do this on TradingView. I'm going to do an example on TradingView so you guys can see it with the indicator, and then we'll hop over to FX Replay just because FX Replay doesn't have the kill zones indicator. I don't think it does, but if you guys comment below if it does have it and I'm just missing it. But basically, I put the candles back to, this was the 8 a.m. candle. So pretty sure this is me coming into the market. So I start kind of on the higher time frame. I look at the weekly just really quick and kind of gauge an idea. I know that the weekly candle is bullish at this point, and I know that we're kind of in a weekly range. The weekly is kind of irrelevant at this point. Now this is going to be kind of stupid like this because it's going to show that this candle's already printed. But imagine this Friday candle hadn't printed. So what do we have here? We have our previous day high right here. So we're going to mark out our previous day high. And at this point we have previous day low, which is still a draw on liquidity. So right there, boom, we mark out our previous day high, our previous day low. We know that at this time, obviously it's going to show on TradingView that it took it out, but it hasn't taken it out yet. Next, we go down to the 4 hour. As you can see, previous day high, previous day low. We're kind of in a range that this isn't the greatest price action. But you see that the 4 hour is technically in bullish structure. We broke structure to the upside. We've been trending, but the 4 hours just overall in a range. So next we go down to the 1 hour. Okay, we look on the 1 hour. We know that the 1 hour is looking a bit more bearish. We had a nice push to the downside, a pullback into a 1 hour bearish fair value gap right here. Pull back into this 1 hour bearish fair value gap, and we had a rejection down. So to me, this is looking like we want to go bearish. Now I'm going to start marking out my draws and liquidity and thinking of potential scenarios what price could play out for here. So I'm going to put the kill zones indicator on. Okay, so what do we have here? We have this swing high right here, which is kind of just like a 15-minute high, but it's kind of relevant to us because it did tap into this gap right here. We have this hourly high right here. And then for the rest of our buy side, we have this London high right here, as you can see. And then we have this small hourly high as well. Now we go to the sell side. What do we have? We have London low. Now what I do is go down to the 5-minute to make sure it's accurate here. We also have this Thursday AM low right here, so you can mark that out as well. I'm just not going to write them all out right now because whatever. So we have this Thursday AM low, and then we also have this Thursday London low. So we have all these draws and liquidity here for sell side that we could easily target if we are going to continue with this bearish bias. So we have our buy side draws marked out, sell side draws marked out. We could also mark out this where I think there was a gap here. Just give me 1 sec. Yeah, we also have a 1 hour bullish fair value gap right here. So we have all our sell side draws marked out. We have all of our buy side draws marked out. Basically at this point, I had a bearish bias this day. We ended up catching a long and ended up winning after. But from here, since I have all this marked out, what I'm doing from here is scaling down to the 15-minute. Okay, and I'm looking, are we respecting bullish or bearish on the 15? As you can see, we inversed, hold on a second. I think we just slightly inversed this 15-minute gap. We came back in and retraced into it, but the 15-minute looks a bit more bearish. We look on the 5-minute. Now, what do we have on the 5-minute? We're trending bearish. And keep in mind, this is at 8:55. So let me kind of skip till 9 till market open here. So this is 9:15, 9:20, 9:25. Okay, so this is what the market's looking like coming into the session, right? We see at this point, price is respecting off of a 15-minute bearish for value gap right here coming into market open. And we see on the 5-minute, we did have a shift to the upside. So my idea now is, okay, if we continue to respect this 15-minute gap and maybe get a shift downwards and we displace down, I want to be looking for sell side draws right here to be getting taken out, which was, again, that London low, that AM low. But if we can trade above, maybe get a continuation model, we trade above this gap, then I'm going to be looking for a buy side to get taken out. And in this case, what was our buy side? We had this hourly high and this 15-minute swing high here, whatever. And then up here, we have true day open, previous day high, London high, all that stuff like that. So that's how I'm doing it. I'm scaling down from, I start on the daily, mark out previous day high, previous day low, and I look and see what way the daily is kind of trending. Then I go down to the 4 hour, okay? I see, okay, we're in a range on the 4 hour, but we're overall looking more bullish. I go to the 1 hour, I see that we were trending bearish out of this gap, and we have sell side draws below, so I'm favoring a bearish bias, but I'm not marrying my bias. I'm willing to trade to both sides because we have draws and liquidity on both sides. Next, I'm going down to the 15-minute. Okay, market, pre-market, so right before market open. Keep in mind, this is the 9:15 candle going into market open. We are right now respecting or within a 15-minute bearish fair value gap. So what I'm saying is, okay, we reject, shift in order flow. We can look for lower, or if we flip this here, we're probably going to go higher. And if you look, we'll click one more candle. We obviously get that manipulation to the upside. Obviously, there really wasn't like a trade here, but again, that's just the ideas you have to go into market open with. So I'm going to pause the video. We're going to go to FX replay so I can kind of show you a little bit better. But yeah, we'll get into another example really quick. All right, so now we're on FX replay, and we can see that this is a 929. We can actually do this a little bit more accurately. The only problem is we don't have the kill zones indicator, but we do have this indicator, which kind of shows the session highs, session lows. I don't know. It's not as good, but whatever. So we'll start off on the daily here. Again, I'm not really looking for like trade examples right now, but what I'm doing is kind of just like showing you my thought process. So at this point, I come to the market. Okay, as you can see, our daily candle's bullish. We're respecting out of a daily bullish fair value gap. This is, when is this? December 22nd, whatever. So we're delivering out of a daily bullish fair value gap. Obviously, our previous day's high has already been taken out. Another thing you do also is mark out ES and kind of see if there's SMTs. I'm not really going to go into that right now, but that's obviously the other thing. You mark out ES the same way that you mark out NQ, and then you kind of just see if there's SMTs, and you kind of play it off from there. So, okay, so what do we have here? We have previous day low. We can mark out right here because previous day low hasn't been taken out. Even though I highly doubt we're going to come down to previous day low, you could still mark that out. Okay. Are there anything else on the daily that I should be worried about, or on the weekly? Well, we do have this daily bearish fair value gap, which could potentially be a draw for us. So you could mark that out. You could mark it out. Here, I'll mark it out as a box. So you guys kind of, so it's a little bit more visual here. So yeah, we have a daily bearish fair value gap, which we could potentially trade up to. But keep in mind, we took out the previous day high, so we could see the rotation down. Now we go to the 4 hour. What do we see on the 4 hour? 4 hour strong bullish push to the upside. We took this high out, okay, whatever. What do we have for 4 hour draws and liquidity? Well, we have this 4 hour gap right here. Obviously, this gap hasn't formed yet because there's still 30 minutes left on the close. So we have this 4 hour gap right here, but the 4 hour is pretty much in bullish order flow. We also have this 4 hour high resting right below that daily fair value gap, okay? Next, we go down to the 1 hour. 1 hour is in clear bullish order flow. We are respecting off of a 1 hour bullish fair value gap right here. Now, what do we have for draws on liquidity? We can start marking out from here, okay? It looks like London high was taken out, but we have this swing high up here. We have this hourly low, which was the London low down here. We have some draws lower. We have Asia low down here. We have some 1 hour gaps. We have like a 1 hour gap, whatever. And we have another 1 hour gap, whatever. Just mark them out like this. And the main thing here is that, okay, we start off on the daily. We took out previous day high. We're pretty bullish. We're delivering out of a bullish fair value gap. We have this gap appeared we could target. 4 hour. 4 hours bullish. We have, what do we have for 4 hour draws? We have this 4 hour gap right here. We go to the 1 hour. We're delivering out of a 1 hour bullish fair value gap. We have a draw at London low. If we want to continue lower, we have these 1 hour imbalances. We have Asia low, and we have previous day low all the way down there. So now from here, I'm scaling down to the 15 minute. And on the 15 minute, you can obviously see, okay, we're delivering right now out of a 15 minute bullish fair value gap right here. So my idea going into market open is, if we want to continue to respect this 15-minute gap, potentially we can look for longs up to our buy side draw, which is going to be this hourly high, these 15-minute relative equal highs, whatever. But if we want to continue to trade lower through this and we get a continuation model lower, what am I going to be doing? I'm going to be looking to short into London low, into this 4 hour gap, which has not been tapped yet. So I don't come in with a bias, even though I'm leaning a bit more bullish, because we are respecting bullish order flow. We're respecting out of a 1 hour bullish gap, respecting out of a 15-minute bullish gap. So my idea is, if you have to say if statements, if we continue with bullish order flow, we get a bullish, displacement to the upside, we get a continuation model to the upside. Like for example, on the 5 minute, if we inverse this 5 minute gap right here, maybe I can look for longs up towards these relative equal highs right here and then continue up to this high. But if we continue to reject off of this 5 minute gap, what can we do? We can look for potential shorts, continuations down to London low in that 4 hour gap. So let's press forward, kind of just see what happens here. Look, we trade above, we manipulate above, we take these highs out, and weird situation, but we manipulate a bit lower. And what do? We continue up towards that London high, or that hourly high, and then we tap into what? That daily gap. Now, that was a bit of a really weird example, because obviously here was market open. Market opened up, manipulated up, then it manipulated down, and then it manipulated back up. But you can see, whatever. You can see that we continue to respect this 15-minute bullish fair value gap. We continue to respect this hourly bullish fair value gap. So obviously this wasn't be like a great setup, but if you did take a long right here on this displacement, you could have obviously targeted up towards the buy side draws. Again, not a crazy good example, but we'll go to the next day. I'll kind of do the same thing, and then we'll wrap this video up, because we're just going over the thought process. We're not really going over the exact trade examples. So let's go through this one here. Okay. Next day, daily is continuing to trend bullish. We're continuing to respect out of that bullish, daily bullish fair value gap. What do we have here? Have we taken out the previous day high? No. And again, look, tapped into that daily gap, which I had marked out, and then rejected. So we have previous day high right here. We have previous day low right here. 4 hour is bullish, but we are respecting continuously out of this 4 hour gap where we're about to trade above it, but this is just something to kind of keep an eye on. Go to the 1 hour. 1 hour is heavily bullish. Now, what do we have for draws and liquidity? Okay, we have this hourly low right here. We also have London low down here. Do we have anything on the 4 hour that I missed? A very small 4 hour gap, but I'm not going to really worry about that. So for buy side, our next draw is going to be this swing high up here. For sell side, what do we have? We have this hourly low, we have London low, and we also have Asia low. Okay. Next, what I'm going to do, again, go down to the 15-minute. Okay, you can see the 15-minute is pretty extended. We are in a gap right here on the 15-minute. So we can see if we want to reject, maybe we want to continue lower to take out our sell side, or we just get a simple continuation model. Price pulls back into this 15-minute gap right here, and we continue higher. So let's kind of just see. I'm just curious to see. Let's kind of see what price wants to do here. So we're going to get a move up. We trade through that 15-minute gap. We kind of respect it. Let's press forward in like 5-minute increments. We continue to hold 15-minute bullish, and then let's press forward on 30-minute. I don't know, bit of a weird one, but anyway, you get the idea. We respect out of this 15-minute gap right here. We continue in bullish order flow, and you probably could have taken some type of continuation to the upside. But again, those are going to be our targets. We could press forward a little bit, and yeah, really bad session, but you get the idea basically. So you're going to be starting on the daily, marking out your previous day high, previous day low, your daily draws and liquidity that are most relevant to that day. Then you're going to go to the 4 hour. Which way is order flow being respected on the 4 hour? Is it bullish or bearish? You go down to the 1 hour, same thing. You're going to mark out your bullish draws and liquidity, your fair value gaps, all that stuff. Then you go to the 15, the 5, and then you're just scaling down, waiting for a market open, and you're just looking for an entry towards those draws and liquidity you marked out. That's literally it. So that's going to wrap it up from you guys. Again, this was just to show you like the process, not like trade examples, but you'll see this every day. This is what I do every single day. But yeah, that's it from you guys. Hope you guys enjoyed. I'll talk to you guys in the next one. Peace.